The dollar index continues to push up off of these lows here that we talked about in the recent live streams. You can see we broke through this level, pulled back, finding some support. It's possible that we are making a bigger push higher. It's especially possible today if you get US PMIs that come out strong. Because if US PMIs come out strong, that's going to be a huge divergence between US and Europe. Right? Because if you see, we know European PMIs came in pretty light. PMIs, of course, for the new traders out there, newer to fundamentals. PMIs are just basically an index of how purchasing managers for the manufacturing or services sectors of the economy, how they are feeling about hiring and purchasing and, the future. And if their outlook is bleak like it is in Europe, if the US's outlook is positive, that divergence could lead to a very strong push in the US dollar. So it is possible. So we'll have to see. Gold, buy or sell. We get these every single news live stream. Let me just be a warning to everyone watching. Please do not gamble on the news events. We don't know. Nobody in this audience knows if gold with certainty is going to be going up or down. You might guess it correctly. You might say it's going up and then it goes up, or you might say it's going down and it's going down. You might get it right. You might get it right a couple times in a row. But none of us know with certainty what's going to happen to any of these markets because none of us have the data that's going to drive them up or down. We're waiting to see the data. So if you're somebody who is, new to this stuff, please be careful. Don't trade news spikes. I'm telling you, it is a disaster waiting to happen. What people don't realize is that if you trade news events, let's say that you're trading gold on a 1 minute candle and you're saying, well, I'm going to just put buy stops here and sell stops here and nobody can beat me, because you think, well, the market's either going to do this, it's going to go this, and I'm going to make money either ways. But what happens is you put a buy stop and a sell stop, and if you get one of these candles, it triggers both entries and both stop losses, and you lose a ton of money really quick. So please be very careful. Slippage is nasty during these news events, and if you're playing with fire, you're going to get burned at some point or another. Again, I've just seen it too many times. Too many people, get really burned trying to gamble on news events as if they think they know something. They think the market's just dumb and they can figure it out before everybody else. But again, we don't know what the data is going to bring us. Gold could shoot way lower today. And again, for me, the way I would trade news, which by the way, we've got 1 minute, so let me switch over so I can watch this. The way I do trade news is I use the actual economic data as a analysis component, and I trade with fundamentals in mind. So yeah, we are just about 30 seconds out from US PMI data. Gold sitting at 2350. We've got the S&P 500 pulling back on your screens. Now you got indices here, some currency pairs here, the dollar, gold, and oil. We're coming in about 20 seconds here with the news. Let's go ahead and roll our breaking news.
Market analysis, free trading courses, edge finder data, and special offers. What do these things all have in common? They're all available for you right now inside of our free Discord. You can click the link down in the description below to join the free Discord today and get access to all of this and more. Stay up to date with all the latest trading information and A1 content. And if you want to upgrade to our Gold VIP Discord that features every single trade that Trader Nick and our other professional analysts take, you can find the links for that in the description as well. So don't wait, go check out the free Discord today.
Let's see what US PMIs do for us today. All right, and a little bit of initial volatility here. The S&P a little bit lower, NASDAQ lower slightly, dollar slightly higher. Euro down, pound down. Let's take a look here. Data still showing as pending on my end. Gold is trading lower, lost about $7 an ounce there, just a second or so. Yeah, so there it is. PMIs came in a little bit higher than expected here, 51.7 for manufacturing and 55.1 4 flash services PMI. I'll tell you, I don't think that the stock market's going to love that. Gold's not going to love that either. And again, there it is. Stock market down just shy of 0.5% here today. And if we switch back over to the main market view here, there is that dollar making a push here. Again, fundamentals matter, and that data is going to, that's another check mark for at least short-term dollar strength, because again, we had European PMIs come in light, and here comes the US data coming in strong, showing economic growth. When you compare the notes there, it's pretty obvious, right? The US economy is looking a little bit stronger than its peers. And that might push back the idea of rate cuts a little bit. That is a check mark for dollar strength. And we can see now, again, the NASDAQ not particularly loving that off of the lower time frames. We can see a push through the lows. Gold also not going to love that whatsoever. And an update on my position, as I mentioned earlier, the way I'm playing this is that if we erase yesterday's big green candle, it's time for me to get out of the trade, take profits. And if we can stay in the trade, that'd be great. But again, just waiting to see what happens here with this candle. I'm pretty much, there's nothing for me to do on gold. Either I get stopped out for a profit, or we hold support and keep going higher. Either ways, I've got a plan. Okay, so the S&P 500 also seeing a little bit of a pullback here. This has room, in my opinion, to become more, a little bit deeper of a pullback. We've been very, very strong for some time. Each one of these minor pullbacks, Frank and I were talking about this earlier today, these minor pullbacks have been met with a lot of buying pressure. It's a little too soon to say on the day, but so far, this is looking like a red day, potentially. And I think if you actually get a couple days of red candles, it's going to lead to probably a bigger retracement that we have been, I would say, kind of needing for some time. US PMIs came in better than expected. We have US both on the manufacturing and flash services PMI coming in higher than anticipated, showing some positive growth in the US economy, at least according to purchasing managers looking forward. So kind of interesting and positive for the dollar, it seems. What are your thoughts on this move here this morning, Kenzo, on the dollar?
Yeah, it shows that actually the dollar is still gaining the momentum. PMI quite positive. So this might be a bullish move for the rest of the day. But yeah, I don't think maybe it's an aggressive economic news. But at the moment, yeah, we are going to see the market moving very nice, going in favor of the dollar. But that is not really good in the long run. I feel like they're going to still have a problem cutting the rates, because we are on a race where everything that is coming out at the moment, we just think about the rates. Are they going to cut the rates or not? So, and if we see positive stuff like this, it's good for the economy, but we don't really need too much positive at the moment.
Sure. Yeah, no, that's a good way of putting it. We don't see a very weak economy by any means, but we also want to see some cool down in order to get those rate cuts to come into the picture. So market is not particularly happy with the idea of, well, if the economy keeps going, if it keeps, growing quickly, what that means is that a growing economy hires more people. Hiring more people means more spending, and more spending ends up being essentially more inflation potentially. So yeah, it's something to pay attention to. Another one that I wanted to ask you about, probably the chart of the day, I would say, Kenzo, is this NVIDIA move. NVIDIA is currently down another 4% today. And that's saying absolutely nothing, because if you look at the chart on a weekly chart, it is not, it's barely pulled back. But it is a very important piece of the indices. I mean, I don't know, for even I think index traders are now picking up on just how important NVIDIA is to the story. If NVIDIA cracks, the whole market cracks with it, in my opinion. And Kenzo,
Yes.
this move here is already, doesn't look that big, but that's already 11.5% drawdown from the highs. If you were the person who bought NVIDIA on that day, your position is already down over 11%. very, very quickly. So I don't know. What are your thoughts on NVIDIA this morning? Does this have room to keep going? And what could that mean for indices?
Yeah, I think it might be looking bad for 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 Nvidia, but I think it's also a good thing because that was maybe the big boys are taking their profits on Nvidia. We did have like the whole 2 weeks, or let's say the whole month of the hype still going higher. But I think one way or another, we have to get a sort of a reversal before maybe we see another push to the upside. And we know the hype of AI. It's actually still very hot. There are companies that are working with NVIDIA left and right because of AI. So that shows that even though we might see those sells, I think it's just a matter of technical analysis. One way or another, the market will be reversing on that. I don't really see that as a crash or something. I think it's just a good reversal that might happen. But one way or another, we're still going to see some serious push.
Sure. Yeah, I mean, it's such a it's climbed the ranks to become the most valuable company in the NASDAQ here, and now with that place, it also commands a lot of, with that weighting, it commands a lot of control as to whether or not the NASDAQ continues higher or not. I'm curious, Kenzo, from your perspective on the NASDAQ. We're starting to see, at the very least, the potential formation of a pullback. I think it's a little too soon to say because, as I was mentioning earlier, just before you joined the show, if you take a look at the S&P 500 specifically, you can see these little blips of pause before another big green candle higher. My question is,
Yes.
looking for to determine if this is just another blip before another push higher, or how do you tell, or what are some signals to look for that could indicate that this is maybe not just a small pullback and that maybe this is a bigger one starting to form? Is these little pullbacks on the SPX, I've got to pull it up, have been so aggressively bought that
Yes.
the follow through was so impressive. Like every time you'd get these big pushes lower, a long wick would form, and then a follow through push to the upside would occur. Long
It's
wicks
true.
on the bottom, and then follow through moves to the upside. Long wicks, follow through. So I'm just waiting and seeing what happens today, because if we get a close today that looks red, I mean, even yesterday's SPX candle here was a close that looked, it was more red than not. You can see it closed in like the lower third of the candle itself, the full range. But from a candle perspective, I would be hesitant to think it's going to follow through anywhere to the downside unless you finally get a day in which you close near the lows. Now, one thing you could mention is that NVIDIA actually did close near its low yesterday. In fact, you can see there's the close on yesterday's candle. Nice little strong red body candle. Actually held some of its bearish gains, and then gap down here this morning. Again, I think if you're going to see a follow through move, keep an eye on NVIDIA, keep an eye on the SPX, and if you get a bearish close, then I would say that the likelihood is very much that okay, now a red candle close at the end of the day, psychologically, that would do to a lot of people. It would say like, oh wait, where's the buyers? The market didn't immediately snap it back into positive territory for the day, and if that sort of settles in, if you get a rebalance where markets can go down, and that realization comes into the the picture again, I think it's very possible that we see a move down to like 53.25 on the SPX, or the other mention I would say about the indices specifically is we just tapped 20,000 on the NASDAQ here. The NAS 100 hit 20,000 on the dot. That's a huge psychological level there. And so hitting that 20,000 mark could be a short-term, kind of checkpoint where, the bulls take a break. I think it's very, even if you're very bullish on this market, it's very okay to think like, hey, we've had a really good run here. It's maybe due for a little bit of a reality check, just to remind everyone that there are reasons that stocks can go down, that things can there's a bear case somewhere, and right now the bear case has been hiding for a little while. And whenever that happens, I get a little bit nervous about staying overly bullish on stocks.
Sure. Well, let me ask you this: was your portfolio overall yesterday positive? Did you actually have a P&L up yesterday, considering the market sold off? The NASDAQ was down about 0.8%. The SPY was down about 0.3, 0.4%. You did or did not?
I did, and it was really nice because
Yeah.
I only have 4 positions right now, Chris. My positions are so simple. I've got TLT longs, gold longs, S&P, and XLK, but I've got covered calls sold on those. So those are well, in the money at this point, which is not ideal, but they're netting each other out pretty much on the days. So the returns on my index holdings are offset, and then on gold, yesterday was positive. Today's, giving back a lot of those gains. I do have a position on that. If we break this level of support, which very well could happen here, I'll get stopped out. But huge sell-off on gold this morning. Same thing with silver, down 3%. What are your thoughts on the metals?
Yeah, well, I was asking about the P&L for the overall portfolio, because I as well. I mean, it's funny because Monday I was red on the day and the market was up, and then this week it's actually net P&L was positive despite the sell-off. So that shows me that I'm pretty well positioned for if we do have a downturn. I've got some good cushioning to the downside. I'm playing some of the downside, but I think that the technicals I'm looking at right now, I mean, I would like to see the pressure remain to the downside. I'd like to see it play out today, see if there's a decent direction. It's like, if we don't have any direction today, then it was all Monday, which is to me really stupid. But what do I know? But on the weekly charts, this could be setting up for a nice little evening star. If we have a long wick to the north, I've been talking about this the last couple of days. If this pressure puts a little bit more, let's say this green candle is just a sliver of green, or even turns red. To me, that's a nice indecision candle to then lead for some follow through going into next week expiration, which is also a quarterly expiration. So if we have an evening star on the SPY weekly, if we have an evening star on the Qs weekly, this looks really good to me, that the market can finally show a bit of a turn and put some pressure to the downside. And like I said, I hope it continues today, just because we have so much expiring, and most of the time options close out of the money. I saw that the call option volume sentiment is like 11-1. So you guys can see that on the Edge Finder. Like, it's so bullish right now that I'd almost like to see those buyers be razzed a little bit. On the metals, yes, like you said, big sell-off, but I think that it's still the same consolidation that we've talked about. Big indecision candle for the weekly gold move, big sell-off on the day, but this doesn't really change anything on gold for me. This is still the same kind of broadening pattern look, where I'm just going to watch kind of levels like that. We could come and test certain levels, maybe test 2270 to the downside, but if the bulls step in there, I think that's a good opportunity. I did put a bunch of collars on yesterday, which is I buy a put for any protection to the downside, and I sell a call and I finance that, so it doesn't cost me anything. If I get called away on the upside, it's profitable, but I still have downside protection. I thought that was an important thing too. But again, any stocks that I own, I want to make sure that I'm at least protected both ways. So gold, it doesn't really change anything unless we breach 2270. Otherwise, that's a level of support. Silver, you had mentioned this on the stream. I don't know if it was when I was with you on Monday, or it was the time last week. We were looking at that trend line on silver right there. So this trend line is holding, and I'm just waiting to see if the bulls will step back in and get us into some nice confirmation buy territory. Hopefully take this up towards 35, 36. But, again, you got to watch and see, how does price play out here? If we breach this trend line, are we going to come back and retest 26 on silver before we get an up move? I still like silver better than gold, but if we're just correcting, we're just not getting the big confirmation I want to see. Buyers to me would be emerging there. If we're really going to see silver head up, maybe outperform gold again for another stretch, that's my silver trade. Gold, I'm just going to wait, let it play out. To me, this is the first time that we've finally breached the level I've been talking about, which is 105.60. I still want to see how the day closes. I still want to see how the week closes. And of all the dollar crosses, Nick, my favorite one, and the only one that I'm actually in for this dollar strength, well, not only one, I shorted the euro dollar this week. That was a fresh trade. That's the new trade. I'm shorting on the euro dollar because it's the heaviest weight in the dollar basket. And I'm still long dollar CAD, and I'm still long dollar Swiss. I'm not in any of the currency pairs. The Aussie dollar is a trash position right now. When you look at the charts, it's sideways. New Zealand dollar, same way. Pound dollar, same way. Dollar yen, not touching it, but everyone should be watching that 160 level, because the dollar yen has been pushing up the last few days, and we're coming right back in towards that 160 intervention high. So we have this is 1, 2, 3, 4, 5, 6, 7 bullish candles in a row. If we come back and retest 160, you're probably going to poke the intervention button by the BOJ. If they do, that's going to show how powerful that 160 level is. If they don't, and we break 160, then there's another, annoyingly higher leg where the JPY just stays weaker, and there's nothing you can do about it outside of enjoy the carry trade. That's it. So got to watch that 160 level.
That's a good point. And Chris, I wanted to also, I was scribbling when you were talking about Bitcoin a second ago. I wanted to show you this horrible drawing that I made. The yellow is, this is my thought on it, is like stocks. So stocks, and the blue is Bitcoin. So I think similar to, you could also draw one more in here, which I'm going to call the A for ARK Fund. So you've got the S&P 500. I think if the S&P 500 is trending higher for a while, it takes some time before the risk curve to catch up to the super high risk stuff like Bitcoin and ARK. So if we're looking at like this scenario, if you actually see the stock market like start to go, really parabolic, like everything starts to rally, that's where those things I think would like really outperform and like launch past the S&P 500, is if the, unprofitable tech companies start popping into everyone's, mail inbox, and everyone's buying them and rushing into things like that. I think Bitcoin lives in the same neighborhood as like ARK stocks, like unprofitable, high, beta, high risk, high return kind of stocks. So I don't know. I just thought I would mention that, if people are wondering why is it Bitcoin doing way more, it's because yes, this bull market is a bull market right now, but it's kind of a hated and narrow bull market. It is not a very loved, spread out, everyone's feeling
narrow. Narrow is like narrow. All capital letters, dude.
Yeah, very, very narrow. So with that said, it's Chris, I'm gonna back out. I want to. Did you have one more thing you want to say? I didn't mean to cut you off.
No, to your point, like, I've been trading for a long time, right? I thought Mag 7 was narrow. This is Fab 3. This is the trifecta. Like, come on, man. This is ridiculous to see so many stocks underperforming and being carried at these levels, and also seeing the divergence between the Dow and the Russell versus the S&P and the Qs. And look, if you're long the SPY, you're long the Qs, you're basically long the same stocks. If you're long tech, you're long the same stocks. Like, it's all very, very concentrated, which can still run. And I listened to some content, read some reports this week. I've seen both cases where, there's a lot of things to be cautious about, blah, blah, blah. But I've also read a scenario where there's so much that the market is going to look past that we might just continue to rip higher and higher and higher, because fiscal policy is still fairly loose, right? Fiscal policy, not monetary. Monetary policy, I looked at this morning, Nick. The Fed is still, by the watch tool, still expected to cut in September. Now, the Fed keeps saying they don't want to cut. They won't cut. We need to see inflation data. We'll see a round of inflation in July for June's print. We'll see a round of inflation in August for July's print, and another one for August and September. So we still have 3 months of waiting to see what the Fed's going to do, what the Fed's going to say. Watch this CME watch tool jump around for the next 3 months until there's something actionable, good or bad. And it's going to be annoying, but I want to know, like, can the market move without 3 stocks driving it, and can the market move without the Fed? And if it doesn't, then that's the current deal that we're in, is like maybe we just see some sideways price action, but you never know. I don't know.
Did you know we do a live trading show Monday through Friday with guests from all over the world? To get notified when we go live, click the bell button next to the subscribe button, or check in at 9:30 a.m. Eastern Time. We have helpful, free content in the description below and on our website, a1trading.com. Thanks for watching today's video, and we'll see you tomorrow.